indicator that it helped me make for TradingView flawlessly, I might add. And then I decided, well, turn it into a strategy. Just having it as an indicator is okay, but if I'm going to get help, I might as well see what the results of this indicator is. And it turned it right into a strategy as well. No fuss, no messing with the code. It just converted it flawlessly. Gotta love it. I was working on that day one or 3-day door. It sounds like a very simple script, but I gotta say it was more complicated than I had expected it to be. Because the way Thinkorswim was doing it, it kept grabbing the last day of the month as one of the 3 days to count. So then it would throw off all the lines, of course. And if you tried to fix it, then it wouldn't do a look back period. It would only do the current month. Yeah, it was a mess, at least when I kept trying to do it. But AI handled it, no problem. I've been using Copilot. That's the only AI that I use now. All right, looks like we're good to go. I just got to get the screen shared and we're up and running. Still waiting on Spot Gamma's AM edition. We got the PM out already, and there really wasn't much to say. We're waiting. All right, so hurry up and wait. Just to kind of finish the conversation, this is the script that it wrote for Thinkorswim. It turns the new candle into the new month, that candle yellow, and then it lays out a 3-day door. I added a cloud just because I want the ability to turn a cloud on and off. But otherwise, that's it. Short, simple, sweet, and it looks clean. Not a lot of mess to it. And then I just had it done for TradingView right here. The only change I made is I turned the lines into these dots. Otherwise, if you leave it lines, then they'll connect. It'll have that vertical line when it new month starts, and then it drops down and I hate that. It just drives me crazy. So if you turn it into dots, then it doesn't connect from month to month, right? And once I get this published, I've never published on TradingView. Every time I try, they get snarky with me and give me some complaint about I didn't fill the form out correctly, or somebody else has already made the indicator somewhere. We'll see. I'm going to try it this time. If they get snarky with me, I'll throw poo at them or something. I don't know. Good morning, everybody. They are snarky over there. I don't know what their issue is when it comes to submitting indicators. So most of the stuff that I make on TradingView, I just keep to myself. Markets are bouncing back up again. They fell down in the overnight hours. We're going to continue to get shook around by global markets, as we really don't have a lot in our own markets this week. We're just waiting on data. NASDAQ is back in the green with the S&P, Hong Kong, the Russell, the Dow, pretty much everybody. Europe doing really good. The Stoic 50 is up almost 100 or 1 basis point, 1%. We'll say it right at some point this morning. Japan, 0.25%. I thought we were going to do better with Japan this week, but other than them admitting that they did some intervention, we haven't really gotten anything out of them. Existing home sales today, again, we really don't have much until later in the week, and even later in the week. I mean, it's just this the Fed's preferred inflation gauge. Yeah. Other than that, it's just waiting on FOMC, QRA. I get a lot of questions about QRA. I'm thinking about putting something together, like a little bit of a tutorial, try to explain to people what's going on. It's not so easy to do, right? Because you got to kind of flesh out the whole idea of how the government works. Yellen with her treasury statements, and then of course the sleight of hand. We got auctions today at 1 o'clock, the 2-year. As I've said before, if you have one auction at one spot, just assume that you have auctions on the other spots. The other ones would be 11 and 11:30. Even if we don't see auctions here, you know, if we got one, we got others. I didn't catch it yet on what happened, but FedEx had earnings this morning and didn't work out for FedEx. This is one that you want to keep an eye on. It's not as important as like the Mag 7 ones, but when they give their earnings announcement, their forward guidance is useful. You know, is shipping slowing down? Are they having issues? If they're having issues, then it's not really the barometer that we want to use it for. But if shipping is slowing down, if orders aren't coming through, you know, if it goes back to consumer spending. Like I said, I haven't heard it yet, so I don't know what's up with their earnings. Just that I knew they reported, and at first blush they were down. Bot stocks are up again this morning. The current vice president is known to favor legislation positive to pot stocks. They got bid yesterday and they're still running today. Running isn't necessarily a good word to use for that. They're still getting flow. It's a nice way to say it, right? We're not talking about some massive bullish rip or anything like that. They're just getting a little bit of love. They may continue to see a little bit, but she can't legislate. Um, you know, I mean, she can't solve the problem. All she can do is cheerlead for it. But they are getting a little bit of flow. Otherwise, the news is sort of it's dry, right? We're waiting. The market will only sit in this hurry up and wait mode for so long before it just flushes everything and starts over. We're not at that point yet, but we're only going to wait for data for so much, right? The market will become impatient and just say, screw it. So we're holding above VWAP. Looking at the voodoo lines, we're in between these two purple ones, which really aren't that big. It's the white one that really matters. I think if we zoomed out far enough, there could be a red one somewhere, but okay, yeah, that green one's like the big one. But we're nowhere near it, so it doesn't matter. The white ones are the next big levels of importance. You can see how price responds around that. But again, we're nowhere near those either. So from the voodoo lines, really not in a spot where we would get anything out of it. We're basically flat this morning. So looking at the average daily range, the red and yellow lines here, there's no edge towards one or the other. We almost made it to the yellow line yesterday, eventually. There is a gap that needs to be closed on the SPX now. I was looking at that gap on the SPX yesterday, and the only way that we could get that gap closed is if we had a full ADR to the downside, and that was just like, that wasn't going to happen, right? So here's yesterday's SPX, and you could see that the red line was the same as Friday's red line. So if we were going to come down to Friday's close, we'd have to get an ADR half, break that, and then run all the way down to get the gap closed, which would put us really close to a full ADR. There was just nothing on the table yesterday that would make us that negative that could get us down there to close this gap. Having said that, though, it was a really big gap. And when we get a really big gap, we generally don't expect those to fill. So another reason to believe we wouldn't go down there and close the gap. But we didn't get a gap and go either. We just held the zone and chopped about here. So if we go back and study all the different kinds of gaps, a breakaway gap, gap and go, exhaustion gaps, earnings gaps, there's quite a few. This is not a gap and go, and it wasn't an exhaustion gap or a breakaway gap or any. It's like it stalled or failed, and it does leave a gap close on the table. So now we have a significant one above us, and we have a pretty good sized gap below us. We're trapped inside that zone. The ES has similar gap, but it just looks a lot cleaner on the SPX. See, we got close, but close doesn't count. And then it depends on where you count the close too. If you're going to use the 4 o'clock close or the 5 o'clock close or even the 4:15 close. We've already made contact with today's pivot point, so we don't have an MDP. Today's channel is above the previous day's channel, completely outside the range, but the size of the channel is about the same size as we had yesterday. So it's not narrowing. We're back above the weekly pivot. That doesn't really provide much context because we're still crisscrossing back and forth. We have to expand far enough away from the pivot that when we come back to it, we would actually see it as a support or resistance. For right now, as long as we keep crisscrossing back and forth, there's no value in support or resistance or any context of whether we're above it or below it. It's just a neutral zone, and that kind of fits in with what a cog line is, right? It's like a safe zone, and the flows support that statement. It's why it's how we even validate a cog line in the first place. So we have to get away from it. There's no perfect way of defining how big the zone is, not randomly. Usually you can just look at the flows that you do have, look at price, and try to extrapolate how far the zone is or how wide it is. If you just use the bottom in this particular instance, from the bottom to the pivot, be that big, and then just copy it, set it on top. That'd be your top side. That's the size of your zone right now. We got to get out of that. Once we're firmly above that zone, then we'd say we're bullish above the weekly pivot. Or if we get firmly below that, then we're bearish below the weekly pivot. And at that point, we would consider the pivot a support or resistance, a potential support or resistance. We just don't have it at this point. If we think about the S&R lines, S1, R1, we're nowhere near either one of those. And we would have to get beyond S2 and R2 before we would consider the gap into the open to be big enough that we wouldn't close it. If you look at yesterday's trading in that run to the upside, at the end of the day, the best we made was the second resistance line, and we couldn't keep it, right? We got there and it just shut it down by the end of the day. So in the grand scheme of things, we've done nothing. We've gone nowhere. We're flat on the day, and market is waiting on data. Hurry up and wait scenario. We're not even remotely close. We don't have anything anytime soon. $56.31 is a cog line. It's the midpoint of this last leg, and it's just above the July anchored VWAP, which is there in those red dots. So a lot of resistance still to the upside. This is only a 3% pullback. So this isn't the 6 to 7% one that we're looking for. It's not to say that we can't get it, right? If you come back here and look, we started with a good 3%. Then we chopped about the midpoint of that, just like we just measured here. We stalled at that midpoint, couldn't really get beyond it, and then cut that low with a new low. And then down we went, right? So that's still on the table. That would get us into, say, 5,500 and then 5,450 for that good, 6.5% pullback. I'm not saying that's going to happen, just that it's still on the table. No market maker move this morning. They're not hedging. Volume's a little lighter than yesterday, but not by very much. And 80s is still really good numbers, right? 70s, 80s. That's great. These 140s and 100s, those were outsized numbers. Impressive to see that, but that's not the norm. Even getting numbers in the 70s, I mean, think of what part of the year we're in, right? This is supposed to be low trading volume, the doldrums, and we're seeing these levels of trading activity, but no hedging. The daily expected range is 43 points. It's interesting. It's how low that is. 21-day ADR, 53 points, and the daily SD is, call it 52. We'll give them a tick. This is a cumulative volume index, and I went looking for my chart this morning. I must have messed it up. It's one thing about TradingView. But the cumulative volume index on TradingView allows you to look at all US markets cumulative volume, which is fantastic. On Thinkorswim, now that I think about it, I might be able to code it, but we can only look at one, right? So we can choose the NASDAQ, the MX, the NYSE, and look at the cumulative volume. I added the Bollinger Bands and threw some moving averages on it, but when this is pointed up, net buying is in effect, and when it's pointed down, net selling is in effect, right? Cumulatively, is it net buying or net selling? Take a look at this. Now, sure, I've got it pointed at the NASDAQ. It has nothing to do with the ES whatsoever, right? This is the NASDAQ. Net buying is still in effect. We're pressing the edges of that Bollinger Band and continuing to widen it out like we have done before, right? Just pointing it out. The flows are still bullish, even if, we're down a bit, or it seems like we're sideways and we're just not doing anything. Net buying is still going on under the surface. If you take over at TradingView, it's just an indicator. So cumulative volume index, CVI. And when you load that, you can just double click on it and choose US total. It does the Dow Jones, the NASDAQ. So it just all of them, right? Make it easy. And then look at what it is doing, pointing up, pointing down. Now this one's not pointed up as sharply as the NASDAQ one was, but sideways is not down, right? Okay, we're testing against the 10-day moving average from below. We held above the 3-week moving average and the 20-day moving average. Getting a bit extended on VWAP. It's not running up with us as strong as I would like it to. If we get overextended from VWAP, we generally come back to it. I've tried to quantify that, by the way. It didn't get a good number. How far is too far before it needs to stall or mean revert, come back? We are looking at a potential inside day breakout. It tried it once already and failed. If we can get above it and keep it, then we can go after the ADR lines. Just keep in mind, we got that 50% mark up there. It's the cog line. And there's really no reason for a breakout. It's not to say that we can't, but we've been down in this zone since Thursday afternoon, Friday, Monday, right? Here we are now on Tuesday. I gotta update that script. Doesn't look right. I updated it on the other account, not this account. Call wall and put wall really close together. Volatility trigger. We're back in positive gamma. Not by very much. Doesn't really hold a lot of weight since we're just crisscrossing back and forth above and below that gamma line at this point. We need more, right? We don't have it. If you look at the spot gamma index, we're at minus 1.8 still, and it goes to a -4. So we're not extremely negative, but it still has us registered as a negative gamma, and it very likely will until the SPX opens at 9:30. Still no AM founders note yet. I was talking to someone the other day and they said, you know, that spot gamma is fantastic. You should look at it. Great. Glad to get such awesome advice. So we're looking at the 10-day, 30-minute here. We got a volume profile in green, TPO in blue. I know these look like the same thing. They're not. TPO is time price opportunity. It's easily referred to as a volume by time. The green one is a volume profile. It's volume by price. No, I held my tongue and stayed polite, but I wanted to do the Captain Obvious thing. Or, you know, like the Captain Morgan commercial where you do the pirate with his foot on a keg. See, getting it all confused. Captain Obvious to Captain Morgan. It's not much of a leap. We're still under that point of control, and we're not expecting it to move anytime soon. We are now finally starting to cut through those candles that created this point of control, but any move to the upside is going to put us right back into that point of control, and we'll be printing more candles just like we did when we were above it and came back down into it. So that point of control is still going to be our point of control for a while. We're still not expecting any change anytime soon. And that's just going to build this profile out as a stronger and stronger D-shape profile. with that point of control in the middle. We do have this shallow area. So on this inside day breakout that we're working on, if we can get the breakout actually started, we're not seeing any old liquidity up here that would stop us from running up into that pivot point. Just remember, liquidity resides on the other side of the pivot. The pivot we're talking about is yesterday's high. Liquidity is on the other side. We've already seen that this morning. We broke out and we got above the high and got right into the liquidity and came right back down again. There's sellers sitting right there. We don't know if they're done, but the obvious assumption is they're not done. Should be able to see them in the dome if we go back up there. This is looking at old volume, right? It's not current orders on the dome and even today's volume. Has a really nice D-shape profile for an example. Looking at the volume that was up there, it wasn't much, but it was enough. So that's the volume we're dealing with. Liquidity resides on the other side of the pivot. We got above it. We weren't able to keep it. It's interesting to note yesterday's profile, right? If you kind of take some of this off, just, recognizing how much time we spent there, and it's the lower edge, it's the value area low. What you do end up with, though, is a capital P shape with the profile sitting right up at the very top. Liquidity resides on the other side of the pivot. When we finally got above yesterday's highest point and was putting new highs on the day, and we got up into all that liquidity, and we were able to keep it at least until the close before we sold out of it. We don't have a VPOC to carry forward since we opened right at that level and we've come back up and hit that level. It could be worth marking out yesterday's point of control, not from a VPOC, but just a regular POC, right? If we come back down, it's 56.11, it's the cog line. It's interesting how those levels keep coming back into play again and again, right? The point of control of yesterday is a cog line. So either mark it as a cog line or mark it as yesterday's point of control. Either way, 56.11. It's an area of interest. You want to have it on your chart today. If we go back and revisit that level, you're going to want to know it's there. For the moves today, simple enough to, let's just start with our own Globex. I mean, there's your plus and minus right there. If you wanted to take that a step farther and use something more like all of yesterday's regular trading hours, certainly do that too. But starting with this is an immediate level that you can work with. You got your half back and your breakout levels on each side. It's more than enough right there. There is a concept of trend days, and it's not a day where we have price move and we look at it and say, well, we were trending, that must be a trend day. If we're inside yesterday's price action, then the market's not trending, right? And we were in Thursday's price on Friday. Monday, we were inside Friday's price. Right now, we're still inside Thursday's price. We're not trending, right? But if we can get an inside day breakout of yesterday's range, then we'll be able to focus on a trend day for today, just today. Not a trend day on the week or anything like that. Trend days can move a lot farther than you think it should. It's one of those days where it just keeps going and going and going and going. And every time you think it can't go any farther, it goes even farther again. And we've seen those kind of days a lot recently to both the upside and the downside. For an example, last Thursday, after making an exaggerated move, it decided it was going to make an even more of a move. So it's one of those days where it just keeps going and going. We have that set up, and there's various reasons on when or how or why we can get these, but the lack of data can be a catalyst for one of these, because it won't take much data to get us going. The only issue with that is that we got a lot of volume today, when normally, if we're looking at one of those days that could be a trend day due to a lack of volume or a lack of data, we usually have a lack of volume on those as well to start with. We don't have that. We got really good volume this morning in the 80s. So it's on the table. Whether or not we can actually get it is completely different. Yesterday was a really good candidate for one of those days. We had a strong, really big gap up and a lack of real data coming in that should shake the markets. I expected that we could have got one yesterday, up or down. I mean, this is a directional conversation, just a mahjong game of trying to figure out what today's day is going to be in relation to the other days, because these days just repeat again and again, right? Oh, come on. I broke it. Yay, there it goes. I kind of hit on it a little bit earlier, but the flows yesterday were bullish. They're still bullish. This is the C tick, cumulative ticks. Here's the zero line down here. They were above zero most of the day. The green line was riding in the middle, just like a good bullish signal should. It wasn't leading, which I would have liked all day. It wasn't leading all day, but it was riding in the middle before we got that afternoon breakout and expansion. So, this wasn't telling us anything was bearish. You got the advancing and declining issues of the NASDAQ and the S&P. This is the NASDAQ 100. This is the S&P 500. They were both above their zero line, respectively. Strong advancing. We had 398 names out of 500, which were advancing, and 75 out of 100 that were advancing in the NASDAQ. So still bullish flows, still buying. And it's not just the Mag 7. It was a broader rally. The Mag 7, by the way, big breakout. It got a little weak. The yellow line is the previous day's high. So inside day breakout that failed, but then it got back up there about 1 o'clock and it held it. At the same time, we had financials. This KRE here in the upper left. Financials got above their VWAP by, say, 10:30, and it kept it all day just grinding higher with an inside day breakout late in the day. So we can get bared up all we want, but there's still a lot of bullish flows out there suggesting that you probably don't want to do that yet. One red week doesn't mean anything in the big picture, which, by the way, marked last week's midpoint, 56.32 cog line. If you don't have that cog line marked yet, it's worth marking it. It's a point of control right now. It's the half back of last week, and it's a cog line. It's going to be a significant resistance level if and when we get there. Bitcoin down 2% this morning, but still up more than 6.5% over the last 5 days. So sure, it's down a little, but Wasn't it kind of due for a little bit of a pullback after being up more than 6.5%? China ADRs are down about 2% over the last 5 days. That does put them in negative territory, so they're still just chopping about sideways. Nat gas is still a joke. China, again, through MCHI, it's just a broader version of China stocks rather than just their internet stocks. Emerging markets, which is basically China. So all that down. It's not a very broad list of things that are down. On things that are up, the Mag 7, building materials, bonds. Although bonds just aren't up enough, got to give them more. So a lot of this is flat or barely up. But building materials and the Mag 7, they're up. But just to, kind of point out here, the Mag 7 ETF that we're looking at here over the last 5 days was down almost 10%. So sure, it's up almost 1% this morning, but that's like a reflexive mean reversion sort of behavior, right? So we got pot stocks back above their year-to-date anchor to VWAP, trying this nice head and shoulders neckline breakout. Home construction, and we saw builders too, was up back to a key level. It's a critical level. We had a reciprocation. What we had above the VWAP, we got below the VWAP, so we got it, like that zipper play. But now what, right? We're back up here. We could get a really nice breakout and expansion. If we do, we'll be looking for a 1, 2, 3, 6 as a test. After that, we could expand into 1.5. Right, so just flip this thing around so we got the numbers on the right side. There's our 1, 2, 3, 6 right there, 28. $128 from a 116 breakout. Call it 117. Right? It's not bad. It's an $11 move. In home construction, no less, right? We're not even talking, some crazy tech stock. These are supposed to be boring, sleepy, slow, calm markets. XLB, another one that's up, but it's not up enough. Got to get a little more out of it. It's an inside day breakout though, but since we closed near the high, it's not enough yet, right? We need more. But it's holding that VWAP like a champ. My problem is this lower low and these 2 lower highs. If we get one more lower low, that's a trend to the downside. We would have 2 lower lows and 2 lower highs. That's a bad deal. We don't have it yet, but we're sure lining up for it. So we need this rally to come up and break these 2 lower highs here. Otherwise, we're going to look to retest 87.5, which would be year-to-date VWAP, and then see if we can break this low and get a new low. And nothing out of bonds. They're just not up enough. So another boring, sleepy day, waiting on data. And keep in mind, this market is going to give up at some point, right? It's going to get tired of waiting, and it'll just move. It'll just make a decision and go. We're not at that point yet. $56.32, minor data auction at 1 o'clock. Everybody be careful, be safe.